This video is sponsored by Real Vision.
In the last few episodes, we've heard experts on this show continuously talk about how they're being defensive and that that's their best outlook for this coming market. But what does defensive really mean? I mean, in sports like basketball, we hear that defense wins championships, but is that true in trading too? Now, the way most people look at the markets is as an offensive game, where you're attacking and trying to make the most money you can. But is the truth actually the opposite? Are the best players actually focused on not losing more than winning? Well, that's what we're gonna talk about today on this week's episode of Real Vision's The One Thing. What's going on, investors? AK here. Recently on Real Vision, the trading legend Victor Sperandeo, or Trader Vic as you might know him, joined us to talk about how to be defensive in this market. And when a legend like Vic, who's been trading since 1968, when he's talking about how important it is to be defensive, then you know it's really a major key to success in the markets.
The key here is survival, right? Staying alive. You know, Jimmy Rogers, I know him a long time. Every time I meet him, sometimes we meet in the men's room in a restaurant. I mean, he now moved to Singapore, so I don't see him as much. But every time I see him, he said, "Are you still solvent?" I said, "Yeah, how you doing, Jimmy?" "Yeah, I'm still solvent." So that was our favorite exchange of words.
Rule number one of trading is don't lose money. And rule number two, well, you can refer to rule number one, because it's not about making the most money. It's about having that defensive mindset so you don't lose what you already have. That's how you're gonna get that success in the long run. And that's why professional money managers spend enormous amounts of time analyzing risk. But exactly what kind of investments are considered defensive? Which are the ones that will outperform the market when times are tough? One of the favorite investments of people in the US, especially those that are in the higher tax bracket, are municipal bonds. Now in 2018, when 93% of all asset classes had negative returns, the S&P Muni Bond Index was actually up 1.35%. Not only do Muni Bonds provide a tax-free stream of income, but they provide a level of safety above dividend-paying stocks, which is what defense is all about. Recently, Fraser Rice of Wealth Actually was on Real Vision talking about them.
One of the really cool things, and something that hasn't been very well understood in the financial press so far, is that the municipal bond space was actually a pretty good performer compared to every other asset class in 2018. The S&P 500 was down 6%. I believe the Barclays aggregate bond was flat or maybe up just a smidge. The S&P Municipal Bond Index was up 1.35%, and that had a duration of about 6.6 years.
Another area that does great during recessions and turbulent times is the low-cost retail space. So think Walmart or the DollarTree. So in 2008, when the market was crashing and people were panicking, Walmart was actually up 20%. By the end of the year, it outperformed the S&P by 58%. And you know you're in a recession when you got the Real Housewives of wherever walking into Walmart to shop. And in those times, even more crowded than a Walmart will be a DollarTree store. In 2008, DollarTree stock price was up 60%. Just because Americans are broke doesn't mean they can stop shopping. They'll just start shopping at cheaper stores. And another thing they won't do is stop drinking. In fact, in those times, you're probably gonna be drinking a little more. Beer stocks are recession-proof, which makes Bud stock another defensive play. In 2008, Bud returned 39%. But the real question is whether the hipsters will be able to move away from their craft beer to something like Bud Light. I mean, they probably can't afford to go to the microbrewery anymore, can they? Maybe a nano brewery is still on the table? Just pay for shots of beer? I don't know, but cheap beer works great during a recession. So on top of these muni bonds and these stocks, another defensive play is buying TLT. This is pretty much what the institutions do. They buy the 20-year treasury. Money needs to go somewhere safe during turbulent times, so US treasuries are usually a good spot. You can see how well TLT did during 2007 and 2008. So remember, even though defense might not be that sexy because everybody wants to be Kobe and shoot and score, defense is still extremely important, and it's what's gonna help you win in these markets. So it's never a bad idea to add some defensive plays to your portfolio. And if you wanna get more ideas of how you could shore up your portfolio, then make sure you subscribe to Real Vision. I'll talk to you next week.